Hey everyone and welcome back to another video for today. So over the past week, we finally had quite a good week. The Couch Investing portfolio was up 9.82%, whereas the S&P was up 3.7%. Year to date, we are now back above 50%. More specifically, we're up 58%, whereas the S&P is up 16.6%. And since the start, we are up 152.34%, whereas the S&P 500 is up 37.57%. And so in today's video, we'll talk a little bit about the upcoming Fed meeting. Yes, we still have companies that are yet to report their quarterly figures. We even have some very interesting analyst conferences, all of them on the same day. And yes, we already have some consumer spending data for Black Friday and Thanksgiving week. Of course, there is another big number that's expected to come out after Cyber Monday. So we'll go over all of that data. Then we have, of course, market data. Some of it I've already shown you over the last couple of days, but then we also have some newer ones. Now, by the way, there still is 30% off Fiscal.ai up until Monday evening, so do check it out. Links in the description and in the pinned comment. So we do have some market data we can look at to see where we might be going from here on out to close out the year and maybe see how we might start 2026. Now, yes, there might be some contradicting data here, but we'll look over all of it in this video. And so without further ado, let's get started. Of course, towards the end, we'll talk a bit about sports. All right, so we'll start off with the upcoming earnings week. Some very popular names, by the way, are still yet to report their quarterly figures. So Monday after the close, for some reason I do see this name pop up quite a lot, Credo, MongoDB. Then Tuesday after the close, we have Marvell, GitLab, CrowdStrike, American Eagle, Box, and Okta. Then on Wednesday, we do have after the close, I think the biggest one or one of the biggest ones, we have Salesforce, Snowflake, C3 AI, UiPath, that's Wednesday after the close. Thursday we have Kroger before the market opens. Also Dollar General, maybe to see what's going on there. Build-A-Bear, you might be asking why the heck are you talking about Build-A-Bear, because I did make a video about it a while ago and this thing has literally outperformed the market. It's not even an AI stock, but that thing has gone from what, $15 to in the 50s right now. Then after the close, my company is Rubrik. That is the one that I own that is reporting over the next couple of days. So Rubrik Thursday after the close, DocuSign, SentinelOne, we also have Ulta Beauty. So a lot of cybersecurity names are reporting over the next couple of days. What do I expect from Rubrik? I do expect beats across the board, and I would even say that guidance is going to be raised. Now that was the earnings week, but December 3rd, which is Wednesday, we do have UBS Global Technology and AI Conference. And what companies are going to attend that? Well, we have Shift4, AMD, PayPal, and SoFi. So of course, all of those companies I do own. They're all going to be presenting, well, talking about their business Wednesday, December 3rd. Of course, since we're going to be past Black Friday, Cyber Monday, I do expect Jamie Miller, which is the CFO of PayPal, to give us some more information on the consumer. Now, of course, until Wednesday, I think we're already going to get quite a lot of data from Salesforce, from Adobe, from Shopify, from MasterCard, and of course, from PayPal themselves. They will tell us what has happened throughout this weekend. And I do think, and you'll see based on the data that I'll show you, I do think that the consumer is spending a lot more than what was previously anticipated. And I think that could be a good thing for PayPal. But we'll have to see. We'll just have to wait a couple of days. Talking about that data, we already have quite a lot of data to work with. So Shopify president here, Harley, said the following thing. Black Friday results are in. Shopify merchants did $6.2 billion in total sales on Friday, up 25% from last year, 22% on a constant currency basis, a record day for the entrepreneurs who power this platform. Consumer spending surged at 12:01 p.m. Eastern, when sales peaked at $5.1 million per minute. The average cart price at checkout was $117.93. Continuing here, we did have some projections, but we also have some numbers. So Black Friday online sales reached $8.6 billion by early evening, according to Adobe, but we already have a better number. AI-driven shopping traffic is expected to surge 600% as more buyers use AI tools online. Mobile shopping and buy now pay later services fueled strong growth. We know that PayPal is really pushing buy now pay later and also agentic e-commerce. So if we look at the data that we already have right now, total season spent from the start of the month of November up until, well, now that I'm filming this, it's $111.4 billion. That's up 7.1% year over year. Mobile spend is up 6.8% year over year, and buy now pay later spend is up 9% year over year to $8.2 billion. The forecast here, according to Adobe, is $253.4 billion in spending during the whole holiday season. In 2024, that was $241.1 billion. Now here, we already have some numbers for Wednesday, Thanksgiving, and Black Friday. For Black Friday specifically, the number came in at $11.8 billion according to Adobe. That's up $1 billion year over year. We're yet to get the following figures. And you can clearly see when revenue really started to accelerate. As for buy now pay later mobile spend, that's set at $6.7 billion, and buy now pay later spend during the holiday season was $18.2 billion. Last year, the forecasted number for this year is $20.2 billion. And then as for AI-driven e-commerce traffic, AI is changing how consumers shop for holiday gifts. The holiday season, traffic from AI sources to retail sites is expected to rise 515 to 520% year over year. Of course, it's a very, very small number, but it's a start. I do think that this thing will continue to go up and up and up. And again, I think that PayPal is well positioned this time. If we look at sales for Cyber Week 2025 predictions, they told us the following thing. Cyber Week sales are expected to reach $334 billion worldwide, up 6% year over year, and $78 billion in the US, up 3% year over year. Salesforce anticipates that $73 billion, or 22% of all global sales, will be influenced by AI and agents during Cyber Week. This is a significant increase from $60 billion in 2024. Mobile orders will account for 70% of sales and 80% of traffic this Cyber Week. 25% of all purchases made over Cyber Week will be made via a mobile wallet like Apple Pay. Now, if we look at the pre-Cyber Week data from October 1st through November 15, this is basically how they made their predictions. They found the following thing. Over 19% of orders were influenced by AI and agents in the lead up to Cyber Week. Digital retailers who used AI and agentic features on their channels saw a 5% higher conversion rate compared with those who didn't. And here we're seeing some cases where, yes, you can already see a return on investment on these AI investments. The same retailers using AI and agents saw 10% sales growth year over year compared with 5% sales growth seen by those who didn't. Traffic from AI and agent-powered sources like ChatGPT, Perplexity, etc. also increased 3.8x globally year over year over the last 7 weeks and 1.8 times in the United States. Lastly, we do have some preliminary insights from MasterCard Spending Pulse. US retail sales excluding autos were up 4.1% on Black Friday 2025 compared to Black Friday 2024. The MasterCard Spending Pulse measures in-store and online retail sales, representing all payment types and not adjusted for inflation. And remember, with PayPal specifically, they said that the basket sizes were smaller, not that fewer people were transacting with PayPal. And so now that we've got that out of the way, let's talk about some other things, the broader market. So in around 10 days, we have the next FOMC meeting, and currently there is a 87.4% chance that we are getting another 25 basis point cut. We are also expected to get some economic data this week. On Monday, we have ISM manufacturing PMI. Then on Wednesday, we have ADP non-farm payrolls, ISM services. Then on Thursday, jobless claim. And Friday, we have core PC inflation and consumer sentiment. And yes, I do think that if we want to have an end of the year rally, we do need economic data to go our way and also get that rate cut. You do not want to have a forced rate cut because the economy is doing very, very badly. You want to have a rate cut because, well, inflation is under control and unemployment is also not that bad. All right, moving on to some market data. This was what we talked about on Thursday. Unfortunately, on Friday, the Zweig Bread Trust did not get triggered, but that's fine. We still have until December 5th to trigger that one. Now we can already see what happened with the S&P 500 when we almost had it. Well, if we almost had it, you can look not a lot of data to work with, but the odds are definitely in our favor here. And like I said before, even if we do get it, this is the max drawdown after it's like Bread Trust, which I don't think is that bad. Now, on the positive side of things, the S&P 500 is now up 7 months in a row. What has happened with it afterwards, a month later, on average, we're still up 0.81%. The amount of times that we were green is 63%, and that only gets better from here on out. That's for the S&P 500. For the Nasdaq, well, the Nasdaq up 7 months in a row, then down this month. This is basically what happens. 1 month, 2 months later, only 60% of the time we were green, but on average, you can clearly see that we are still up, and then from here on out, it does get better and better. Then let me remove myself right here. So this is what happened with the S&P 500 after equity put call ratio fell below 0.45. Here, the probabilities are not in our favor. Whether it's 1 day, 2 days, 3 days, 4, a week, or 2 weeks later, things don't look that great. Then on the left here, we have here what happens with the S&P 500 after the VIX put call ratio jumps above 1.46. Here as well, things don't look that great in the short run, right? We're only looking at what happens up until 2 weeks later. I did want to add, this is future me talking, I did want to add that if you look at the data and the dates here, a lot of the red that you're seeing did happen after we peaked. 2021, 2022 went into high inflation and higher interest rates. Now back to a more positive data point that you can look at and work with. Here we see the Nasdaq, the percent of stocks with a MACD buy signal is now the highest it's been since April. So again, we are getting a lot more, let's say, signals that we might be getting in end of the year rally, although there still is, I think, a decent chance that it doesn't happen. I mean, late next year, we do have US midterm elections. And if you look at what has happened before the midterms and after the midterms, well, before the midterms, the average return of the S&P 500, not great, okay? That's negative 18.2%. But after the midterms, up 5.8% after 3 months, 10.5% after 6 months, and 14.8% a year after. Now, the smallest drawdown before a midterm, in those 12 months before it, is around 7.4%. That was back here in 2014. Now, we just had also a small drawdown, so let's just call it a day. And so with all that said, am I adjusting the portfolio in one way or the other to see, oh, are we going to get an end of the year rally? Are we not going to get one? Yes or no? No, the answer to me is no. I like the companies that I have. Maybe some of them, if we continue to go up aggressively, maybe it might be time again to take some profits. But for example, Google, I know a lot of people will ask, okay, you've doubled that position. Is it time to take some profits? Right now, I don't see why. Okay, it's definitely not as cheap as before, but it's not extremely overvalued either. And so I'm not going to buy more Google. But I don't see a reason why I should be selling Google right now. I'm very happy with SoFi, with Nebius. I think Nebius is still a position where I would like to own more shares, so I'll accumulate accordingly. With AMD, also almost doubled that one. Then we have Micron, yet to report their quarterly figures, has been performing extremely well for me this year. Now on Micron, we did have a report that said that they're going to invest $9.6 billion in Western Japan to make AI memory chips. The US company's decision enables Japan to secure domestic access to key components, and Japan itself will, I think I've seen, contribute around 500 billion yen or so. Then going back to Google, and this in my opinion is the strangest case, right? Because if we go back a year, 2 years or so ago, ChatGPT came out. Well, 3 years ago, ChatGPT came out, but 2 years ago, we've had really, and 1 year ago, peak fear, right? Oh, OpenAI, ChatGPT is going to destroy Google, etc., etc. Well, what we're seeing right now is quite interesting. Gemini's app downloads are catching up to ChatGPT. Okay, ChatGPT is still leading, but Gemini, of course, with the release of Gemini 3, with Nano Banana Pro and all of that, it is getting a big, big push. Plus the fact that it is an amazing model and easy to use. Lots of college students are getting it for free for the next year, so they're definitely getting quite a lot of momentum. Then we've also seen that Gemini users spend more time chatting than those of rival chatbots. Also, a pretty good thing here. So at first we've had OpenAI coming after Google. Now what we're seeing is actually, okay, OpenAI is still expected to lose an insane amount of money for the next coming years. Yes, revenue is probably going to go up. But now we have Google that is probably back at number one. Google, huge cash cow. They can basically, if they want, give away Gemini, even Gemini Pro for free. They're not. There is Gemini, the free version, just like ChatGPT. There's also one where you pay for. But we've seen all of the talk around, right? OpenAI, they've made huge commitments for the next X amount of years. Where's that money going to come from? We don't know. Same thing with Oracle. Oracle also, they will report mid-December. And so we're in this interesting situation where a big player in this whole AI ecosystem, which is OpenAI, which is also one of the main reasons why a lot of companies have gone up in value, might also be the reason why a lot of companies might go down in value in the future if they do not deliver. Then on the other side, you have Google, which was literally left for dead not that long ago, becoming, well, literally the return of the king here. And they might be the reason why the rest will have some issues growing their business. Now, we'll say this, that if you go on the street and you ask a random person, do you use AI? If they answer yes, there's a very high chance that they will say yes, ChatGPT, and not Perplexity or Gemini. Okay, positive. The less positive thing is that they're probably using it for free. Moving back to the portfolio, number 6 here is still Rocket Lab, then dLocal, Uber, Meta. Meta has seen a nice rebound over the last week or so, back to $647. Then we have Alibaba. They reported, in my opinion, a very good report. Stock went down more around the, well, US-China relations, I would say. Then we have the cash position. Oscar is back a little bit under $18. This is also one position where I'll accumulate more shares in time. Same with Shift4, same with Rubrik. Then we still have some shares of PayPal in this portfolio. Duolingo, Appcelera, Nvidia, and Palantir. Yes, Duolingo, as you know, horrible performance here. Now with regards to the options and Iron and CoreWeave, oh, by the way, if you do want to follow and get the notifications from the portfolio, you can use promo code CouchMonday or the link down in the description and in the pinned comment. You'll get 20% off. This promo runs until Tuesday. And so I still have my 500 shares of Iron. I still have the shares of Pagaya, which were previously options, sold at a loss, went shares because, well, the timing there was off. Options for PayPal are still all in the red. I'm still giving the March 1 time in December. Then all the rest, I still have ample time, I would say. But yes, it doesn't look great at the moment. But again, the majority of them are, well, this one, June 2026, I still have 2 quarters left and probably 2 rate cuts or so. And then the rest is January 2027. We have plenty time. Then CoreWeave. CoreWeave is now at 273 shares. Average here just under $90. And yes, so currently I am down 18.7% on CoreWeave. And lastly, sports section. So we have an incredible final week of Formula One for us next week in Abu Dhabi because McLaren have bottled it yet again this week. Max Verstappen won the race today, which means there are only 12 points between him and Lando Norris going into the last and final race next week. Max needs to win next week, and Norris needs to finish 4th or less in order for Max to win. Piastri is now 3rd in the race, but same thing there. He needs to win, and Norris in his case needs to be, I think, 5th or 6th or lower. Incredible stuff. Incredible stuff. Then, myself, man of the match, player of the match for Manchester United. Yes, I did assist two of our underperforming players, Xerxes and Mason Mount. Great goal, I would say so. And then Chelsea Arsenal, very big game, very, very big game. 1-1. Chelsea did play for a long period of time with 10 players. Caicedo deservedly got a red card. Very, very good game. Okay, 1 and 2 remains unchanged. And also, yes, congrats to Liverpool for finally winning a game. And congrats to Alexander Isak, or AI, for finally scoring 1 goal for Liverpool. Congratulations. And so all in all, that's about it for me in this video. Share your thoughts down in the comment section below. Are we going to get an end of year rally? Are we not? How are you preparing yourself for 2026? Let me know down in the comment section below. And maybe who's going to win next week? F1 predictions also in the comments. Check out all the promotions. We'll see each other in the next one. Bye-bye.